Hello everyone, welcome once again to my YouTube channel. My name is André. Thank you for being here. As always a pleasure to share my views with you and to get your feedback. Let's go into some of those currency pairs that I shared on my previous video, and the objective is to get you synced with those advanced pattern formations. Obviously my main goal here is not to suggest any type of trade. Um, I just have the objective to share with you a trading concept, eventually a trading strategy, because I will sometimes I will talk about the strategy that I use to trade those patterns. And that being said, so as usual, I like to share my views with the community, and let's update some of those charts. So let's start with the cable. I shared these on my last video. I shared also this pattern obviously before the completion point or very close to those levels, suggesting this bullish swing, this bullish momentum with some specific targets. And on my last video, we were trading very close, I believe, the 50% Fibonacci retracement here. The market has started to pull back, and it has reinforced this ascending trend line as a support. So this is a 2 hours time frame event. Please ignore this noise, just for you to get an idea of what it's happening on cable on a higher degree scale or a higher time frame. Basically, we are now trading above this major descending trend line resistance. The market has found a nice support, printing our monthly fractal below, and triggering this bullish crab pattern extended, bullish shark pattern, extended at 224% Fibonacci extension. As you can see here, then the market has reinforced that level with kind of a double bottom and started to trade higher from there. So then we have this smaller, or let's not smaller, actually this is a 12 hours time frame. It took a long time to form this sideways moving process, this consolidation process, and as soon as the market breaks above this flag, we saw the default projection for that pattern being reached above at the golden fib. So this is a golden fib from this previous structure high. So this previous last swing low, a retracement from those levels. We are now threatening. We were threatening the golden fib there. The market has found nice resistance with the weekly and the monthly fractal, actually recovering the monthly fractal printed earlier, with the weekly support printed above and the recovery of the fractal. So now we are settled above this, for now, as always, a virtual trend line. The market, those exist only as a guideline for a price breakout of the most recent momentum, as an indication. We never know if the market will print a false breakout below this structure and print us a different type of structure, and that's why I search for lower time frame events that allows me to create a motive to participate with a friendly risk reward approach. So as I said before, I was expecting the golden fib as the second target for the pattern. This is just one of the examples on how to trade those advanced pattern formations. Note that we are now approaching the previous structure highs. So this was previous structure's resistance, and it's now support. Note that the scope for the 200 moving average on a 2 hours time frame chart is pointing down, so we're still in a bearish momentum for the cable. Let's not ignore the reinforcement or even a breakout below this major trend line. Let's see what will happen at this point. Let's actually I just need to adjust some things here, and let's take the advantage of being here. I just need to put a, for now, I just need a full retracement. There, note that we are threatening the very first important or the strongest level, Fibonacci level, so we are now rejecting or at least finding some pressure at the 38% Fib. So let's see what will happen from here. I will not ignore more bullish momentum for the cable, but well, beside the fact that we are moving sideways inside this consolidation process, and again, reinforcement the time frame that we are seeing this chart at this point, we are moving sideways. During that process, a few patterns may form, but let's see how the market will behave here. So for now, on a 2 hours time frame, we are threatening this 38% Fib after a breakout of the next zone. Let's call this kind of a double bottom, and we are now threatening a resistance support zone. So I will not ignore a bounce from here, eventually for a new high, but just to pay attention for, actually I just want to call your attention for those default targets. The golden Fib, this red 61.8% Fibonacci, projected at 131.61. It has been reached today, and as soon as the market reached that level, it has started to fall and actually recovering the previous 4 hours fractal resistance. So, and this pullback, let's see how the market will react here. So we can face this as a kind of a double bottom, and we are now retesting the next zone. So basically this is what we have. We have also a lower time frame that I forgot to mention my last video. We have a lower time frame kind of cup and handle formation. So we have the market starting to trade higher, and then it has formed this cup, the handle formation, and then it has started to rally. So at this point, we are not only threatening the previous structure resistance now as potential support, but we are also threatening a neck, a multiple neck zone for this kind of a double bottom here, and this cup and handle resistance now as support also. So let's see what will happen from here. For the cable, at this point we can start to project patterns above, and basically, actually the market has already printed that pattern. I need to put a Fibonacci retracement here. Actually the market has failed that Fibonacci level just by a few points, but if you take in consideration the very last swing low, and if you start to measure those retracements, at some point we can expect the bearish, one internal, let's call this an internal bearish pattern formation at 88% Fib. So as you can see, the market almost printing that pattern, which has forced the price to fall immediately as soon as it approaches that level. And reinforcement with the second target for this major pattern, that's what we have. So I will not ignore trading higher for the cable, or even the 169 extension, which will put the price trading very close to the monthly resistance there. So I will not ignore that possibility. Obviously, for those who are positioned on a long, or took advantage from some event here, or eventually the double bottom, or the cap and handle, so we just need to hold those long, because eventually we will see the market trading higher, but without ignoring the bearish lower time frame momentum that we are trading at this point, and without ignoring this is only a sideways moving process. We need to understand the market can print different patterns. Just to finish with the cable, nothing to do at this point. My interest was down at these structures, so we have some interesting risk reward at that bottom. So for those who are holding longs, you just need to try to manage your trade and try to partitioning your trade during that process. Obviously, the second target being reached for the cable, it forces a trailing stop, in preference above break-even. So usually we put our stops at break-even at 38% Fibonacci, it's a few points below, and then if the price achieves the second target, we start to trail that position. As I said yesterday, or as I said on my last video, I took an opportunity to buy this market, but then later, once I break even my trade, the market has threatened my break even, so I exit my trade with half of my initial position size. I started to partition my position at 38% fib. So that being said, I didn't take advantage from the pattern itself. I took advantage from the second time that the market breaks above this trend line resistance. So this very last, or the very first, this candle here. So somewhere around, somewhere inside this candle, once the market breaks above, I took my longs there, and I'm still holding that position, assuming that if the market breaks below this previous structure resistance, it may fall and eventually retest, or as I said before, reinforce this trend line, or even trading below that trend line. So let's not ignore that possibility for the cable. In terms of real positions, I will wait for a retest of the monthly fractal. So if that happens, it will offer me a nice, eventually it will offer me a nice risk reward opportunity to try a short on for the cable. But until there, I will wait, and I will try to hold my longs from these levels. So for the euro versus dollar, I published also this, and I shared on my, I believe on my last video, some of the eventual events for euro versus dollar. One of them, the eventual, at that time, the eventual formation of the right shoulder. So with the price completing this symmetrical three-wave structure at that point, and I was mentioning the possibility for a breakout below this parallel ascending structure. So once the price breaks below this structure, I saw, and I believe it's we can see with the head, the left shoulder, the head, one ascending neck, not the horizontal neck that we were expecting, but later, as you can see here, the market offering a nice and strong bearish candle there, right below these levels, these previous structure support. So this strong candle. The real trend line for me, it was this, and we have this moving sideways, a consolidation process after a breakout, or threatening the breakout of this structure. In fact, the market finding some pressure. Once starts to trade below, it has found some real resistance at that trend line, which triggers this bearish, fast and bearish candle, strong candle. So as we can see, we have a few events there for euro versus dollar, all of them projected and shared among the communities I work with. So if you have some interest on trading those advanced patterns. And we are now approaching the 224% fee, 110.19. So this is the limit to form these very last bullish shark pattern. So this will put the price trading the golden fib retracement, a major golden fib retracement, and the 224% Fibonacci extension. So that will complete, that may complete the bullish shark pattern. If that happens, that will suggest a pullback, a bounce from those levels. Obviously, we have the weekly fractal right below. It's not impossible, and this is euro versus dollar, so get used to 100% Fibonacci retracements. So eventually the market will actually retest this bottom, the weekly fractal. But let's pay attention once the price starts to approach these levels. Let's pay attention to the price action. Eventually it may offer also another opportunity or another bounce from these levels, which may offer a nice opportunity to go long with euro versus dollar. One eventual five-wave structure is also a possibility with one second. A third wave, if extended at those levels, even better. A fourth wave, then a target, because the market needs to target the 38, the 50% Fibonacci retracement from all these bearish momentum, the most recent one. So I will not ignore a retest of this previous support, and then eventually rejecting to trade above to form then later the fifth wave, which can put the price very close to the default projection for the head and shoulders, and eventually forming this bullish major shark pattern also at 168 extension projected at 109.59. So this is a few points below the fractal, the previous one, so I will not ignore one hunt of those stops positioned right below. As soon as the price starts to approach these previous highs, a lot of people will start to buy those levels, with stops very close to those levels too, very close to their entry. So that being said, I will not ignore the hunt of those stops to form that pattern, to targeting the 78% Fibonacci retracement from the monthly fractal, which is positioned right below at 108.79. So this was formed last October, first day of October 2019. So I will not ignore this kind of a three-wave structure, a five-wave structure also, in fact, searching for those levels. For now, we need to remain with what we have at this point, and based on the Fibonacci criteria and variables at our disposal, I will not ignore some more bearish, even if limited, bearish momentum for euro versus dollar, searching for those levels. If that happens, eventually we will see the market bouncing from those levels. Obviously that can happen from the recent price levels. Actually, we are now facing signs of bullish divergence. Let's see what will happen here, but I still loyal to those completion points, to those Fibonacci levels for euro versus dollar projected at 110.19. So then, and today I will not take longer. I will try to update some charts during the weekend, and then I will share another video with some of my insights. So as I said before, I was trading this position from the bottom, from these lows, and trying to take advantage from the breakout of this major trend line resistance approaching from above. So I took that advantage, and I started to project the pattern, the bearish crab pattern above at 168 extension. So the market has reinforced that price zone with a fractal, which has triggered more, which has triggered downside momentum for the HOSI. And as I said before, I believe we were trading, I'm not sure at this point, I believe we were also forming this eventual right shoulder at the moment that I shared that video, my previous video, saying that eventual forming the right shoulder. So we are now threatening a few levels, a multiple resistance, a multiple pressure zone with a trend line resistance approaching from below, a major trend line resistance, and the most recent one as a support. So we are now holding nicely above this pressure zone. Let's see how the market will behave. We are also trading the 168 extension. As you can see here, the market has traded a few points below that fib, and it has bounced from this level. So this is nothing more than another shark pattern printed below 168 extension. Obviously, we need to assume some risk on those trades. We have one initial target at 50% fib, so this is my initial target. Then the market prints a few points below the most recent support. So from these lows, the market has almost reached the default expectation, or the default target for the shark. So then, as usual, the 5-0 sequence was formed. So we have this bullish shark pattern at 168 extension, or something around that price level. And once completed, we assume the market needs to trade, needs to bounce from these levels, and then the market ends up forming the 5-0 sequence. And from that level, we assume also the market will resume with the previous momentum, so as usually, the bullish shark pattern at 50% Fibonacci retracement will offer you the bearish 5-0 sequence, and that may also offer some bearish momentum. So at this point, nothing to report for the HOSI, nothing unless that we are trading below the previous daily fractal support and threatening that eventual next zone, but multiple trend lines there, a support, and previous resistance as support also approaching from below. So let's see how the market will behave from these levels, based on what we have, and a clear bounce from these levels, and based on the criteria and Fibonacci levels that we have at our disposal at this point. Let's not ignore a retest of the daily fractal that will print the bearish bat pattern, which may also offer a retest of the previous support. So that's one of the things that I'm waiting for the HOSI, but obviously that will depend on a lot of other circumstances, no? Including Dixie, euro versus dollar, including the New Zealand. All those factors together, let's see how those will behave. For now, we are just holding fine above these previous or multiple trend line resistance. Talking about the Kiwi, I said before, the market is bouncing fine. We are now threatening again the recovery of the daily moving, the 200 moving average. The daily moving average is pointing down to 65.12. This was a bearish bat pattern, and in fact multiple patterns or pattern zone, price zone there between the bearish shark pattern and the 88% fib for the bearish bat. A minimum of 38% Fibonacci was expected, but we have now nice support levels. I will not ignore that possibility, because that's the expectation for the pattern to trade at 38% fib, and it doesn't matter how the price will behave during that process until the market touches those levels. We can see a lot of different price behaviors until the price, before the price touching those levels, and we never know if the price will actually trade those default targets for the pattern. For now, nothing more than this. So I will not ignore also a bounce for the Kiwi from this previous structure support. This is a nice structure support there. So with the price rejecting multiple times that level. This is Australian dollar versus the Kiwi, and I will not say that I quit, because I need to pay attention to those levels. At any time the market can form an opportunity to get involved. But I decided to pay less attention to this pair, because it has failed already a few times from this bottom, from these lows, with a few other events failing me. So at this point I prefer to stay away and to wait for what will happen. I was expecting the breakout of this structure, this bearish trendline resistance at some point. The market has failed me already a third time, so I prefer to stay away and wait to see, instead of paying to see. So CHF, another one that I shared with you on my last video, and well, 113% Fibonacci extension nailed, and forcing the price to bounce a second time. We have a first time at 224% Fib, with the market offering some support there, then a violation of that level, and it has found support at the major alt-bat pattern completion point, this brown pattern. So at that point we can expect a bounce based on those default criteria and variables supported by those Fibonacci levels. Assuming this as a false breakout, we can also project the price above this previous structure resistance with some patterns between the 161 and 224% Fib. As I said before, the 224% Fib, eventually it will retest or reinforce this trend line as a potential resistance, so pay attention to those levels, without ignoring obviously previous structure support. It may act as resistance. So if the price breaks above this daily fractal resistance, we may see the price threatening this ascending trend line support, which is now also an element of resistance, and the recovery of this structure eventually it will put the price trading very close to those levels. And obviously the one that will offer me the best or the most friendly risk reward approach, it will be the one formed at the 224% Fib. So let's wait also and see what CHF is about to offer us. Obviously, do not ignore a third drive with eventual 1 second and a third drive below. Let's see how the market behaves, and obviously without ignoring also that will depend the strength of this momentum, but I will not ignore the price falling below this daily fractal support, approaching a third drive, and then eventually the formation of the crab pattern below at 94.31 or something close to that level. So, but again, trade what you see. Don't trade your speculation and your expectations, because you don't have a bearish trade at this point, unless you are expecting the market to trade even lower. And if you trade a breakout, if you want to trade this breakout, eventually a new high above this previous daily fractal may offer you a nice retest of this trend line, and a rejection of that trend line, or even a rejection of this daily fractal resistance may offer you a nice opportunity to get involved. But I have this bullish alt-bat pattern printed below, so my default target, or let's call it a default expectation for the pattern, is the 38% Fibonacci retracement. So basically it's a retest of the daily fractal, as I said before. So let's not ignore the possibility for CHF to actually to trade the default targets for that pattern. If that happens, that may also, for those who are trying to go short, that may offer a nice, at least a nice price level to get involved if you trade the breakout of those structures. The Canadian, As I mentioned before, we were trading inside this consolidation process here. We were threatening the breakout of this structure. The market ends up trading a few points above and then inside again the structure, reinforcing the previous structure support trend line, and it has been forced to bounce. My default expectation was projected very close to the previous structure highs. We have also the 88% fib there, so at that point I was projecting the bearish bat pattern, or eventually actually the Gartley pattern at 127% fib. As we can see, the market has found some pressure at that level. Let's see how the market will behave. Default targets for this specific lower time frame event, eventually the pullback again to the previous structure resistance, 38% fib. We have a second target then later at the golden fib, but the first target retesting the previous structure. Let's not ignore the eventual support zone at these levels, and let's not ignore the rally for a new high. And if that happens, we may see the price actually not there, but the 113% fib, the bearish alt-bat pattern territory. But I believe if the market fails to reverse from, or not to reverse, but actually to reverse the most recent momentum, I will not ignore a retest of the weekly fractal. And because it was a very strong swing there, so a very strong bullish candle there, I will not ignore this smaller pullback, and then the market keep trading higher. 131.84 golden Fibonacci retracement. Pay attention to that level also, and that's what we have for the Canadian dollar. Obviously, I don't have a trend line here, but we are trading above these, or we broke the price has broken this descending momentum. So I will not ignore more bullish momentum for the Canadian dollar, which implies also more bearish momentum for oil after that fall that I wasn't expecting. Not that I wasn't expecting, I can expect the market to fail some pattern. I will show you just in a minute. But let's keep with the NOK for now. Norwegian krone, we as I said before, nice trend line support there, holding the price multiple times, and with the price approaching that level again, I started to search for potential patterns below. So the market has offered me a nice opportunity to go long at 113% fib, golden fib. As I mentioned before, the price completes the pattern. I mentioned attention to that Fibonacci, golden Fibonacci level. It's a golden Fibonacci retracement from these structural lows to the most recent highs, the monthly and weekly fractal. So don't ignore those levels if synced with some of those completion points. So we have the one internal, let's call this an internal alt-bat pattern projected at this trend line, offering nice support and suggesting that bounce, and the market is already trading very close to the 50% fib. So actually beyond our initial and first target at 38% fib. Second target position at the golden fib right above. So a retest, a reinforcement of that trend line I will not ignore, and I will not ignore even a retest or an attempt to retest that weekly fractal if the price breaks above this trend line. Mexican peso, as I projected before, the price has completed also the bullish alt-bat pattern at 113% fib, a very similar pattern as the Norwegian krone has offered, but resilient to break above the previous structural resistance. So at this point, it can happen. It can take a long time for the real breakout to happen. So this is just a threat to break above this most recent and virtual trend line. The market can enter into a sideways process and then eventually achieve our targets, and the same way it can start to print more bearish patterns, kind of a flag pattern or moving sideways and then new lows. It can happen, and it can take a long time for that to happen. At this point, I believe, and the pattern suggests the 38% Fibonacci retracement. Obviously, this is a daily or a 12-hour time frame, so this is a higher time frame chart, so that will take some time to happen and to achieve those levels again, if that is the objective. Dollar versus yen, as I mentioned before, I suggested these lower time frame or lower degree heads and shoulders. For those who were here on my last video, I suggested these as an eventual heads and shoulders formation with targets to 109.49. So this was my default target for that pattern. And as well, and here we are, trading and recovering from those levels. 200 moving average. I'm not sure if I mentioned the possibility for the price to find some support at that moving average. We have also, and in fact, the monthly fractal support is there. This is a 2 hours time frame event, or time frame. But if you go into a daily, you will see these monthly fractal resistance there now being threat. So actually the market has violated this structure to retest this major trendline resistance. And if you go into a 4 hour time frame chart, as I said before, we have found support at the 200 moving average, and we are also trading between or right in the middle. It has found support right in the middle of those two default shark pattern completion points, the 161 and the 224% fib. So that being said, we have kind of not a bearish but a bullish shark pattern at 161.8 extension. So basically we have this first swing, a retest of the highs, a false breakout, 160.8 extension, 224% fib. So this is the range where we will start to search for a reversal candle, and eventually we will see the price targeting the default 50% fib there. We are also actually the market has nailed the 38% fib. We have the gold, not the golden fib, but the 50% fib retesting this previous structural low, so the previous structural support level, kind of 50% fib, bearish 5-0 sequence. If the market decides to trade the 50% fib, pay attention to more downside momentum for the dollar versus the yen. So we are talking about the bullish shark pattern, which tends to give sequence to the bearish 5-0 pattern at the 50% Fibonacci retracement, the default target for the pattern. So that being said, let's not ignore this eventual behavior after these heads and shoulders printed above for dollar versus yen. Euro versus yen, as mentioned also, I shared this bearish alt pattern at 122.80. Missed with the right shoulder, so I was also expecting kind of, okay, eventually it will form also the right shoulder there, reinforcing that short, but the market has decided to this is euro versus dollar, not the same as dollar versus the yen, euro versus the yen, sorry. But as you can see, the market has found nice pressure at 78% fib, so let's wait and see what we have for euro versus yen. I was also projecting the eventual pressure zone between the golden Fibonacci extension and the 224% fib. So as always, when I see a false breakout, I tend to project those levels below this previous structure support. If the market breaks below I will start to plot that possibility to find some pressure at those levels. As you can see, and I believe it's clear, we have some pressure zone there. We have some pressure at those levels. First of all, the 1628 extension, 200 moving average crossing those levels also at that point. And the 38% fib, also the major Fibonacci retracement, nice support there. Then it has transformed into a resistance, and 224% fib again, small support there, actually reinforcing that the retest of the previous Fibonacci level and the previous structure support, and then a fall into those Fibonacci retracement levels. So the 78% fib was the level that the market has chosen to find some decent support. At least that's what we have at this point. We never know what will happen. No event at this point. There's nothing more to report unless if the market breaks below this daily and weekly support. Again, the same thought that I follow here, trying to project those Fibonacci levels below these false breakouts, I can use the same criteria now. If the market violates this, not that one, let me plot this like this. If the market, actually I'm wrong, let me just correct a few things here. Exactly from here. I can use exactly the same criteria between those highs, kind of a false breakout above the previous structure highs, the weekly fractal, projected below. So if the market violates these structure supports, I can try to identify those potential pressure levels. Obviously it will take some time. Actually this is a 2-hour time frame. Eventually it will not take so much time. This is not a daily time frame chart, but I will not ignore those pressure levels below, including the very first one at the 1628 extension at confluence with the golden Fibonacci retracement, a major Fibonacci retracement. And we will be talking about something like a major bullish shark pattern territory. So at that level I will see the market eventually finding some pressure, obviously without ignoring the 224% Fibonacci extension. So we have a trend line here on a 2 hours time frame chart. Also we can draw a trend line being threatened at this point. Let me just add my magnet mode here and try to identify where exactly the price is trading at this point. So we are threatening this ascending trend line support at that level, and that's one of the reasons why the price has found some support there. Convergence with the 78% fib, the major ascending trend line support as potential support. We never know. For now, as I said, as I used to say, it's a virtual trend line until the market actually proves that there's a reinforcement, and actually the market proves that will act again as a potential support trend line. But again, if the market breaks below these previous structure supports and weekly and daily fractal, I will start to plot the possibility to trade at those levels. 38% Fibonacci right below that fractal. There, the major Fibonacci retracement. So it's a retracement from the monthly fractal to the weekly resistance, actually to the daily. I need to update those levels. But take this idea, at least for now, nothing specifically. This can turn into a major or a higher time frame edge and shoulders. Let me delete this eventual pattern there. But I will not ignore these and somehow the market needs to reinforce this next zone. Let's use the 38% fib. I will not ignore kind of a major structure, a major heads and shoulders formed later. But for that to happen, we need to reinforce a next zone somewhere between or very close to those lows. The 38% Fibonacci is just one example. The market can find support there and then bounce. Eventually, the time that the market takes to form these left shoulder, or the market will need also the same time or the same or similar time to form the right shoulder. So let's pay attention for the price action there. This nice triangle there, eventually we will have a nice flag there also to short. Eventually the market will offer us, and let me try to explain my point of view here. So this is a copy of this previous structure, and let's call it the left shoulder structure. If I reverse this into flipped, I believe so, something like, and let me use a trend line here, put your imagination at work sometimes. A reinforcement of this next zone and eventual sideways moving process, very similar to the previous one. I will not ignore that. So actually the 38% fib, it may act as potential support there. Then the 50% Fibonacci also synced with those previous structural lows. So let's not ignore that possibility for one major heads and shoulders. Too soon to predict. Obviously it is too soon to predict, but we need to start to make some assumptions. So a breakout below this daily support and weekly fractal support may offer some support a few points below, so the price needs to find some support there, and if that happens, we will see eventually the formation of that right shoulder. The major patterns projected below, let's even too soon to project those, and let's wait and see. For now, nothing specifically, unless you want to wait for the breakout of this ascending trend line support. If the market breaks below, and if the market decides to retest that trend line and reject that trend line, it may offer you a nice trading situation there. The Guppy, well, nothing. I believe I shared this chart also with some of you. Let me delete this nonsense trend line there, or nonsense, and don't even remember why it's there. But let's increase my time frame, 12 hours time frame chart. We were trading the 88% fib, so this is the bearish outbat pattern completion point. I'm not sure why this chart is incompleted, but by default I will wait for the 38% Fibonacci retracement to be reached. Actually, let me change this into a daily time frame. Okay, I have there my targets. 88% fib, 38% retracement is the minimum expectation for that pattern. If I go into a 4 hours or a 2 hours time frame chart, we're still threatening that major. Actually, let me go again into a higher time frame to show you that trend line on a daily. So we are on a daily. We are threatening this trend line as a potential resistance. So basically, we are threatening these previous structure highs. If I go into a 2 hours or a 4 hours time frame, and we need to start to plot the possibility for a retest of those highs, the weekly fractal. So in that being said, if that happens, and based on these most recent, the same criteria here that I shared with you before, a false breakout will imply an extension. Obviously, if broken above this previous structure resistance implies an extension above that resistance zone. So that will put that may put the price trading the bearish shark pattern completion points between the 1608 extension and the 224% fib. So one of them below the previous highs, the other one right above the previous highs and retesting the previous and major monthly fractal resistance above. That will not invalidate the bearish bat pattern, but obviously trading above the starting point of the pattern will start to vanish and start to fade with the probability that implied with the formation of the pattern. So let me say that it will start to vanish with those probabilities for the price to target the default 38% Fibonacci retracement. Aussie versus the yen. Let me go, I need to go into a lower time frame to plot this one. At least to show you what I was seeing at that point. I plotted this as a potential edge and shoulders formation. As I said before on my previous video, I was expecting the market to pull back a few points or a few more points and to form the right shoulder, paying attention to the 75.15, the eventual breakout point for this kind of pattern. Well, and the price has rally above that level, and it has found some resistance very close to the default projection for the pattern, which was 76 and 76.28, so the 200% Fibonacci extension, reinforced by the daily fractal resistance, and I saw the price breaking below these structural lows. When I saw this, same criteria apply there, extension to the 1608 extension or the 224% fib. We have this most recent fractal resistance now, it's positioned there, the most recent support here. So we have that small adjustment, so we have already a new fractal above, so we need actually the price to break above that fractal to achieve the default target expectation for the pattern. Let's wait how the market will behave from those levels. So Aussie versus yen, also very constructive during this process, printing this bullish shark pattern at 1608 extension during that external event between United States and Iran, completing the pattern and the price rallying immediately, very similar to the dollar versus the yen. New Zealand versus yen, I'm not sure what we have here. I was projecting and I was expecting kind of a right shoulder once we were trading below, so the market ends up searching for the support at the golden Fibonacci level right there, and a bounce followed by a bounce from those levels. So nothing very specific. Let me just clear this chart in order to get a better picture or a clear picture of this. Let me see what we have here. This is also again 1608 extension from this false breakout projected below, so we have shark patterns projected below. The golden fib acting as a nice support. It doesn't mean the price will rally from here. It's just a pressure element, and the market ends up feeling pressure at that element. Let's not ignore one eventual kind of edge and shoulders or inverted edge and shoulders. So if the market decides to break above these highs, it may trigger that pattern without completing those shark patterns below it. Just because they are there, we don't know if the price will complete those patterns. we know if the pattern, if the price completes those patterns, we know what to do accordingly to the pattern and the invalidation points of the pattern. We have a scenario or a motive to participate, but until there's nothing to do with the New Zealand versus the yen. Bearish sharp pattern printed above. I was expecting that Fibonacci extension, Fibonacci level to be reached, and it can happen. Let's wait and see, but let's not ignore these eventual heads and shoulders. Canadian dollar versus the yen. I need to go into a daily time frame for this one, or 12 hours time frame. Let me see. Bullish momentum or ascending momentum, well supported by this trend line. It's kind of a parallel structure. At least this is my draw here. It doesn't mean that's the real structure that we have. Actually, we have kind of a different. We can see this as a different price structure. Let me try to show you this. Basically, we will use the same trend line as a support there. But at some point, and as soon as the market violates this descending momentum, retested again, and has found some support there for the next bounce, then the market has found some nice resistance there. So, and it has forced the price to fall, and we see the breakout happening above this trend line, with the price retesting that trend line here. So as you can see, the price breaking above the trend line, retested the trend line, printed a new higher high, and then recovering the trend line again after a retest of that trend line. It was not an easy task to recover that structure again, but it has, at the end, the market ends up recovering the structure and falling below. So at this point, we are trading the 38% Fibonacci level between from these lows to the most recent high. So this is the box that we are trading and plotting at this point. A bullish cipher pattern is now projected at 82.16. So this is the bullish cipher pattern completion point. If the market violates this major ascending trend line support, that's one of the possibilities, without ignoring, obviously, more bearish momentum for the pair. If the market breaks below this structure, eventually it can try to search for other support levels below and end up ignoring this bullish cipher pattern. We never know. But based on the criteria that we have, if the market finds a decent support level around this area, this price zone, searching for a reversal pin bar, it's my suggestion. As soon as the price approaches that level, that may offer a nice bounce. Euro versus Australian dollar, and for this one I need to go into a daily time frame. I have projections above. This means nothing. I'm not even sure if the market will break above this structure resistance, and if the market will break this fractal above 163.13. We never know if that will happen, but if that happens, that will trigger this kind of cup and handle formation, and it may offer actually a nice opportunity for those who are searching for longs. Obviously, we still, it's a fact that we're still trading above this virtual trend line. The reason why I'm not using the previous structural lows is because this low belongs to this previous structure momentum. So that momentum was broken, and as soon as the market breaks that momentum, it has found a nice support and it started to bounce. So from this most recent support, I draw my trend line here because I saw the price sometimes respecting that level. So this is what I call a virtual trend line. Again, they are there to be broken at some point. And that being said, I see this as a potential cup and handle or inverted heads and shoulders. If you want to see this as an inverted head and shoulders, we can see it like that. I just have projections above for now. If the market breaks above this fractal, and if the market breaks above this descending trend line, the most recent one, that is a possibility to see the price printing that bearish pattern at 88% fib. Euro versus the pound, printed at 113% fib. The market has actually disrespected that specific Fibonacci criteria, trading a few points below and forming the weekly fractal. I was expecting, and I still am expecting, the 38% Fibonacci as a default target for the pattern, but we are now trading, and as we can see here on a higher time frame, the descending trend line resistance approaching those highs and the price respecting those levels. If I go into a 4 hours time frame chart, we can see the price respecting those levels. I expect some pressure at this price zone, 127 extension. This is nothing more than the bullish butterfly pattern, and one of the levels that will identify that pattern is the 78% Fibonacci retracement level being reached, or at least the price trading very close to those levels. At the point B, so I need the price touching those levels. In fact, the price has failed just by 1 or 2 points there, or a couple of points. That's 78% fib. It has bounced, reached resistance again, and then 127% Fibonacci extension, a few points below the golden fib, acting as a potential support. So now I expect some bounce from these levels, but again, this is a lower time frame event. We never know what will happen here. A 4 hours time frame, it can end up forming a crab pattern extended at 168 extension if the market decides to print a few points below. So in terms of risk reward opportunity, I don't see a clear and friendly picture at this point. First of all, because we have this weekly fractal support position and below, so and if I need to respect that level, because if the market decides to approach the 168 extension, I believe it makes no sense to target the 50% fib or the 38% fib. I will just as one example here of risk reward, but the extended crab pattern will target the previous structure support level, so that's a default target for the pattern. So this is in fact my reward, and if that is my reward, and assuming that I don't want to lose more than what I'm expecting to win for that trade, that will force me to use a one-to-one risk reward approach maximum, and I tend to search for a friendly risk reward approach. I tend to search for a 1-2 risk reward or 1-3 risk reward situations. As you can see here, that will not offer me a very interesting situation to trade, because if I use my stops below, and if they decide to retest the fractal or even trade a few points below the fractal to want all those stops positioned below, I will be entered at my eventually we will see the price reversing at my stop loss. So it makes no sense. I can create a scenario to trade. Okay, I will use the 78% fib. If the market decides to break that level, I'm out. I can create a situation to trade similar to like this, but always assuming the possibility for the price to retest that fractal. So that being said, that bullish butterfly pattern at 127 extension, we can follow the same example here. So that being said, we enter the market at 127 extension. We target the 38% fib from our entry, And I use, let's use a one-to-one risk reward again as an example. Okay, one-to-one risk reward, so we will be forced to put our stops very close to the 78% fib. So I don't think it makes any sense. The only thing that we can try here is to search for a friendly risk reward approach to trade that pattern, and assuming that the market has traded a few points below, so the target needs to be adjusted to that same low. Your reward is already adjusted to that level also. So at some point, if the market keeps pushing lower, your targets will be pushed lower also, and at some point you lose your friendly risk reward. At some point you will be trading with more risk involved in your trade than the reward that you will expect at some point. So that being said, attention, because just because we have a pattern there, it doesn't assures you a friendly risk reward. You need to understand the price structure and the price behavior, and if there's an objective to threat the previous structural lows, and specifically if you have a large range between those completion points and the previous structural lows and highs, you need to understand that eventually the market will threat your stops. So that being said, careful with those trades. Now, euro versus the New Zealand. Obviously, flagging here our consolidation process, I was projecting this bullish shark pattern at 224% fib. The market ignored that level. First of all, it didn't complete the pattern, a bounce, and then ignored completely that level. And once that happens, I started to project eventual bullish major shark pattern, and considering all this behavior to 168 extension. So that one, it can form. It is actually a possibility to form that pattern. Let me just delete those levels. If you go into a lower time frame chart, you can see the formation, or almost the formation of these. Where are you? Of these bearish Gartley pattern at 127 extension. So I started to project this pattern as soon as the price breaks above these previous structure highs, or very close to those levels, assuming, okay, if the price breaks above, eventually it will retest that trend line resistance. I believe I shared these thoughts previously. A retest of this ascending structure trend line. It was a support, obviously, and a retest of that trend line may offer you a nice opportunity to go short. That being said, projected at the trend line or very close to that trend line, we have a bearish Gartley pattern. The market has failed just by a few points, but we take an idea, a retest of the trend line may offer you a nice opportunity to go short. Pay attention to those levels. 165.70, right above the monthly fractal, we have the first option, the first 168 extension, and the bullish, the first bullish shark pattern completion point. The second one will be positioned at 224% fib, which will put the price trading at new lower lows from this major structure. And obviously breaking the monthly fractal support. Nothing more from there. The pound versus Australian dollar, I remain with this idea for or eventual heads and shoulders formation. Obviously, it's too soon to predict a pattern. We have this bearish alt-bat pattern at 113% Fibonacci extension, reinforcing the eventual formation of the right shoulder. Breaking below this weekly support may trigger more bearish momentum. We have the default projection below one broken neck at the 200% fib, 177.72. So this is the default projection for the edge and shoulders. Obviously, it's too soon to predict. As I said before, we need to see the market violating this structure, because the market can retest this previous highs and keep trading even higher, eventually forming that pattern above that I was expecting earlier. But we have now this bearish outbat pattern completion point at 113% fib, this internal or lower degree event there. So eventually that will reinforce the formation of the right shoulder, and if that happens, we need to pay attention for more potential downside momentum for the pair. Above, that's what I have. I have a projection above for one eventual crab pattern extended at 168 extension. If that happens, we will see eventually a retest or a reinforcement of this major ascending parallel structure that I draw here. Let's wait and see. For now, that's what we have, the eventual right shoulder being formed there. The pound versus New Zealand, and before finishing with the Dixie, as I shared before, 88% Fibonacci, 88% Fibonacci retracement, bullish bat pattern completion point, this gray bat pattern there. Default target achieved, 38% fib. I started to project this internal or lower degree bearish crab pattern at 168 extension. The market has found some interesting resistance here with this parallel inside this parallel structure. So let's see how the market will behave actually from here. I will not be surprised with more bearish momentum. That's what I'm expecting, a nice swing low consolidation, and I want a nice swing low again. Nothing assures me that will happen, but based on the default expectations for price action, in fact, we have one first swing low, a retracement. I need at least, I'm projecting a symmetrical projection. I'm using a symmetrical projection. It doesn't mean the market will obviously print that symmetrical projection. And I have my first levels below this level. I have the next pressure level between the 168 extension, the 113% fib from this structural low, from these lows to these highs projected below, and the 168 extension, which I need to adjust just for a moment. I believe I need exactly this Fibonacci extension. Adjusted to this previous structure. Okay, we have a box here, or a cluster box zone between the golden fib retracement, golden fib extension, and the 113% fib from the last swing high. So that being said, that may offer some pressure there below the daily and the weekly fractal support levels. Obviously, I will not ignore if the market decides to keep trading higher from there. It's also a possibility, and we have some patterns there. So now let's finish with the Dixie. I shared this with those who have checked my previous video. And I was saying, okay, we were threatening this major descending trend line, and I believe at that point we were forming this flag there, this triangle, actually, and the Dixie ends up breaking above that same structure. Actually, it was kind of expected, because if you use the default expectations for this type of behavior, we understand that after an impulsive momentum, if there's a triangle, eventually we will see the price breaking in the direction of the previous strong momentum. So if that was a strong momentum, eventually we will see the price trading the default expectation. So as soon as the market breaks the structure, we can use a default projection for the breakout. So eventually we will see the 97.97 is a default projection for the Dixie, but just for this smaller or lower degree pattern. So 97.97, the Dixie may trade at those levels based on the breakout of this structure. If that happens, we have also some eventual pressure zones for the Dixie. First of all, and very close to the default projection for this triangle there, one eventual actually it's not correct. I don't need this 113% fib. I just need 161, and let me change this color to blue. There, exactly. The only pattern that we have at this point, and it will require the Dixie trading or printing new highs above the weekly fractal. It's a bearish, extended bearish crab pattern. So, and eventually those shorts will be limited by those Fibonacci retracement levels if formed. So we will target a 38% fib by default, and eventually the market will find some support there. But obviously the breakout above this descending trend line resistance, suggesting upside momentum for the pair. Actually the flag there formed also suggesting more momentum in the direction of the previous swing after the formation of that structure of this sideways and consolidation process. And well, that being said, we have more bearish symptom for more bullish symptom for the Dixie, which implies also more bearish symptom for the euro versus dollar. So let's wait and see what will happen from here. There's nothing more to report at this point, and that's what it is. We have also the major. That's what I was trying to identify here, because sometimes I draw those fibs, and then later when I look at them, I need to try to understand what I draw earlier. Bearish, actually we have multiple patterns projected at that same price level. So as you can see here, we have this bearish shark pattern projected also, and because they use both of those patterns, will use the same swing to project the completion point for the pattern. So that being said, we have both of those patterns projected above at new highs for new higher highs for the Dixie, above the weekly resistance, which is positioned at 98.54. So let's wait and see what will happen from here. And that being said, I finish my my insights here. I hope you enjoy some of those patterns and some of those charts. If you do so, please press that like button. It's always interesting for me to get your feedback, if you enjoy or not those charts. And that being said, safe trades for all of you. Have a nice weekend. Try to rest, to be prepared for the next week ahead, and all the best for you and for your families. Safe trades for all of you, and once again, thank you for being here, and thank you for following my work. Well, thank you very much, and see you the next time.